Good morning. Today is Friday, February 11th, 2011. This morning, I'm asking, out of touch, is the government in Egypt out of touch with reality? And that's what the opponents claim. As you know, we've seen these protests going on over there about the president. They want this guy out, the whole kit and caboodle. Well, yesterday afternoon, we got news. BBC was reporting, a couple other credible news sources, that this guy had a speech coming on. He was going to retire. So the markets sort of got a little bit ahead of itself, got a little bit happy in the afternoon there. As the idea was that if this guy retires or resigns, then now you'd have democracy, a true democracy in Egypt, and the people would all be happy. There'd be less threats of violence, and things would be all honky dory. Well, at the time I was sort of sitting there saying to myself, well, God, is that really what's going to happen if a president leaves? I mean, do they really have a succession plan in place? Is this a case of be careful what you wish for? I mean, who's going to step up? Who are the major parties now? Who's going to take over this government? Is it going to be a government that's friendly to the U.S.? Is it going to be a government that's friendly to Israel? Is it going to promote peace in the Middle East, or is it going to promote unrest? And those are all questions that need to be answered, and I don't think they can be in the brief 10-day period that this protest has been taking place. So to be honest, I didn't really think it was a good thing to begin with. Well, turns out it doesn't matter anyway, because Mubarak gets on television and he's not going anywhere. He decided that he wasn't going to go. They said, everybody who was in the middle of the square, getting their information from satellite TV, should go back home. And I guess, like I said, they're a little bit out of touch. They don't realize that these guys are all on Facebook and Twitter, and that's how this information is spreading like wildfire. So there's an element of risk in the markets. We've got risk aversion going on today, which is dollar strength. Dollar's near a 3-week high. Just show you right here. We're looking at Aussie 1-week chart on 30-minute. Just a nice little downtrend here. Aussie just broke through parity here with USD, so we're now trading under that. All right, you can also see dollar versus loonie. All right, we're just back to approaching parity, getting pretty close. We'll see what happens there. That's going to be close. But oil actually is higher this morning, so that's containing the loonies' losses at this point in time. And you can see that the Aussie right here is also down against the loonie. So that's primarily an oil trade happening right there. Just want to show you the euro. Euro's also down. You can see these charts all look very similar, and it's really been the risk trade that's been going on. They had consumer prices came in a little bit mixed, a little bit higher than expected in the eurozone. So namely Germany, some German wholesale prices. Those came in just about right around where they were expected to come in for consumer prices for inflation. So nothing, no real shock there. But we can look at the pound here real quick, and you can see the pound dramatic sell-off. Here was the move higher yesterday after the Bank of England rate policy decision to not raise rates. All right, and then today we get the producer price indexes from the UK, and it comes in much higher than expected. So it posts a 1% gain versus a 0.5% expectation for the month of January. All right, the producer price index output, the year-over-year number comes in at 4.8% versus 4.4% expectation. Okay, producer price inputs year-over-year come in at 13.4% gain versus 12.7%, and you can see how this is going. The core came in at 3.2% versus 3%. Now these are producer prices, okay, not consumer prices, which are the actual show of inflation. But this gives you an idea. You can figure that if producer prices are higher, they're going to translate over to consumer prices. At some point, businesses are going to have to pass that cost along in order to stay in business. So that's going to be higher consumer prices over there in the UK. But they made the rate decision yesterday. So this could be a situation where this report isn't that important at this juncture. But we're going to come out with the official inflation report in I think a week or two, and at that point, they're going to have to really start making some hard decisions. I mentioned yesterday nobody expected them to do anything about rates. Well, listen, they may have to start doing something over there, because what we're seeing is that around the globe, everybody's in the same situation. Just show you the Kiwi right here real quick. Okay, this is down as well. Now they had a situation there. I talked about this a while ago, and I guess it's sort of nobody really mentions it anymore. I guess it was one of these terms du jour that sort of went away. But the idea was biflation, where you had energy and food inflation, and you had asset price deflation, namely home prices. And you got to be careful when you throw around inflation versus deflation. But you could say appreciation versus depreciation. And in New Zealand, okay, home prices were down, food prices were up, and that's a common theme that we're seeing all around the globe. I mean, you're seeing it here in the U.S., and the problem is that Bernanke and his pals, they don't like to use food and energy as a metric in measuring inflation. So, I mentioned this the other day. It's kind of problematic because food and energy is something that everybody needs. Okay, housing, yes, you need that as well, but you don't have to own a house. You can rent a house. You can, there's a lot of things you can do, but you need to have food to survive. You need energy to be able to maintain a home and to live and to get to work and to do all these other things. So, those are the three important components. You can throw the rest of it out the window, quite frankly, as far as I'm concerned. And I think people around the globe are starting to feel the heat. So we're going to have to see what happens. But this isn't just a problem in the U.S. It's a global problem, and it's all comes back to and highlighted by what's going on over in Egypt. I mean, right now, we talk about the price of oil. Oil's higher. It's around 86 bucks a barrel, I think. And should the tensions there in Egypt start to heat up again, and maybe even go further, we could be up around seeing $100 barrel in oil, which could mean $4 gasoline, which around the globe that's going to put tremendous pressure on inflationary forces, and it's going to take money out of people's pockets basically. And of course here in the US they'll tell you, well, we don't have any inflation because we don't measure that, we don't use it in our calculation, but at the end of the day we're going to all know the truth. So keep an eye on the Egyptian situation. This thing isn't done yet. President Obama's weighed in on it. I don't know what his thoughts are on the matter, but the idea that if you get a group of people out there complaining about a president and telling him he should resign seems a little bit silly. I mean, I don't think if a group of people rallied in Washington, D.C., Obama would be so quick to do that himself. And hey, it actually happened. It was called the Tea Party. So anyway, I think maybe people should sort of step aside here. Let's let these guys sort of figure it out for themselves. Let's hope that there's no military coup, because you never know what's going to happen out of that. And there's all kinds of talks. Nobody knows what's going on. So this could be a volatile situation for oil, and hence the global markets in general. So that's what I've got for today. Keep an eye on this. This is a risky situation, so we could see some further selling. Today's Friday. People may not want to go long over the weekend because who knows what's going to happen there. So that's what I've got, folks. Good trading to all.